On the Property Show, we are keenly tracking how the industry and the central government plan to execute Prime Minister Modi's Housing for All by 2022 mission. Apart from land, technology and speedy approvals, the challenge of accessibility to home finance for the low-income groups is equally important to overcome. And to this effect, the new chief at the National Housing Bank is fully prepared and confident about taking on the challenge. In an exclusive conversation with the MD and CEO of National Housing Bank, Shri Ram Kalyanaraman, the Property Show asks him if the Pradhan Mantri Awas Yojana was on track to deliver results by 2022.
First is I would like to start with the credit linked subsidy scheme. It's form of a unique scheme in the sense that probably for the first time in the country we have a 6.5% subsidy, which is with some income cutoffs, 3 lakhs and 6 lakhs income. But if you look at it, barring probably Bombay, where there's really high cost, it would suffice to most of the other cities in the country. And the effective rate for a customer is probably, if you take today's rate at 9.5, it's going to be 3%. And in some of the states, the biggest advantage of the scheme is when NHB worked it out with the HOOPA, one, there is no loan limit. If there are people who are going to combine and if the credit policies allow them to combine the income and probably take it, it's fantastic. You could go ahead. My subsidy amount is limited. Two, there is no interest rate cap. If you look at most of the previous schemes, there is an onward lending interest rate cap. We have deliberately kept it because we realized the low cost housing needs a little bit of flexibility with the financial institutions. In fact, I still remember when we first walked and met the banks as well as HFCs on the scheme to explain one of the meetings, the first thing is it's too good to be true. And one of the schemes where we have also said it's a women empowerment because the scheme has that the property women should be a joint holder, if not the primary holder of the property. So there is an inbuilt safeguard built there. So NHB has taken it very actively and we signed about, I think today we have 133 institutions. With some of the larger institutions, we have already disbursed 50 crores or thereabouts. So we think this would be a game changer. The other aspect, if you say on Housing for All, is clearly how do we help the supply, right? Now, one of the reasons, if you see the below 10 lakh loans, if you take as a up to September, has shown a little bit of decline compared to last year, both on the bank side and on HFC side, purely on number of units, forget the value. Now, how do we increase? One, all these measures will go towards increasing it, but we need to also work on a lot of supplies. So we also did CLSS, actually CLSS and other workshops with some of the building associations. We did it with CREDA and MCHA in Bombay. We are trying to do it with other associations. So it's going to be whatever help we could give, while we don't regulate them, whatever help we could give, can we be a bridge between the governments and even the builder associations to facilitate it? We need to iron out a little bit of more process. For example, how do I do a deduplication which is very robust? How do I prevent the same person from taking from two banks because there is going to be a time gap? So in fact, I've just said and working with the credit bureaus, how we would populate this data into credit bureaus. Because the moment we do that, the deduplication logic of the credit bureaus are quite high and quite accurate. So we would prevent the same customer from getting a second benefit or probably a same customer from taking advantage of the holes in the system, right? So we would do that. Third, some of that, this one is the money limited, which is the worry. Will you suddenly, we will put a claim and you will say money has run out. So we have said, don't worry. We will get you the money. Please do it. Please reach the houses to the segments and please do that.